So hello everyone and welcome to my YouTube channel. In today's video we'll be talking about break even. What does the term break even means, and what is the relevance of break even in our trading? Now, in a general term, break even is the point at which cost and income are equal and there's neither profit nor loss. Now, break even in Forex, most of the times break even are usually represented by traders as BE plus or BE or B/E, which are usually donated by forex traders when they are trading. Most signal providers equally incorporate that too while giving out their signals. So break even in forex trading, it simply works by moving your stop loss from your first stop loss initial position to your original entry position. So you are only going to move your stop loss once price have moved considerably in your favor. So at that point, probably perhaps it has moved like 20 pips, 15 pips, or 30 pips. Then you can now move your stop loss from its initial position and move it to your entry price. So if you have done that, what you have done in essence, you have done what is called break even. So we are doing that, having back of our mind that the price can eventually turn around and goes back to our entry price. And if it goes back to our entry price, it will stop us out at our entry price. So in that vein, if it take us out at our entry price, we are not going to incur any loss. We are not going to make any profit, or equally not going to incur any loss. The only money we are going to incur is the cost of spread, which our broker is going to take from us from entering that particular position. So stop loss is very vital in forex trading because we are trading a market that carries a high level of risk. And one of the importance of using break even in our trade is that we are using break even in order for us to protect our capital. And we are equally using break even when we tend to allow our trade to run for maybe perhaps a day or two or three, or probably we are targeting maybe 100 pips or 200 pips. So we are comfortable allowing our trade to run if we have been able to break even our trade. In that vein, we are very confident that even price should come back and goes to its entry position, or even go beyond our entry price. We are very, very sure that it's going to close us out at our entry price, and at that point we are not going to incur any loss. So that's the essence of we applying break even in our trade. So alright, so let me now demonstrate to you how to set break even on our trade practically. Now, like I've said before, now one of the rules that applies is that one, you must have a running trade that is in profit, and as you can see, here was our entry price, and above it is our stop loss. And you can see now that there's no take profit placed on this trade. Now if you look below here, now you see my profit here. I'm having this trade running about $413 in profit, and it's a sell position that I've entered. Now if you look here closely at this point of price, here is the entry price at which we have entered, and this is the price at which we placed our stop loss, meaning that if price should pull up to about 1730.62, then it will close us on loss. And if you look closely now on the take profit column, now we're having 0.00. That means no take profit value was inserted at that point in time. And at this point here, price, that is where the market is currently sitting at. So now, how do we now set our break even? So now to set our break even, I'm going to show you two methods of how you can go about that. So the first method that you can apply is one, you hover your mouse to your stop loss and drag it down to your entry price. Now you release the mouse and you find that you have confidently moved. Now you see now that you have perfectly moved your stop loss down to your entry price. So the event at which in any event that price should move down here and goes back up again, on getting down here, it will close you out on break even, mean that no profit, no loss. Now in another instance, on that way you can go about that is you can come in here and modify. Now how do we modify? You come into your running trade, you click on your right click. When you right click, you come to modify. Now on modify, you come to the column for stop loss. Now for stop loss, all you need to do at this point in time, you come in here and key in this entry price, which is 1727.56. Now if you look at the chart, you see now that this is stop loss now, which I've taken back to its original position. Now immediately I key in this price to the column of stop loss, you see now that this stop loss will now be moved from where it is now to now be adjusted to our entry price. So now let me quickly do that now. Let's quickly do that now. So let me wipe that. So I'm keying in now 1727.56. Now watch closely. When I do that, you see how it moves. Now you can see now that this trade that be set to break even. So that is how you set break even on your trade. And like I did mention before now that break even help to protect our capital in the event that price move against our intended direction. Then it will close us nicely at a level at which we don't incur loss or we don't incur profit. But now in a running trade of this nature, as you can see currently now, we're having a trade running about $400 plus in profit. It will not be ideal to leave our trade on break even. All we can do at this point in time is to trail our profit, and what that basically means is that you drag your stop loss at this point in time, you drag it below your entry price. Now if you drag it down here, now you will now see now that my stop loss is now being set now as my kind of like a take profit. Now the stop loss is now being used to trail my profit. Now in the event that price pull back up, now if price should pull back up to this particular level here, is going to close me on a loss. You're going to close me nicely on $103 profit. Mind you, is a stop loss that I drag below the entry price. So whenever you drag your stop loss below your entry price, what you are doing at that point in time, you are trailing your profit. So the event that price pull back up or bounces back up, trying to go back to the original direction where it was coming from before, it will close you nicely in profit. Now I've moved again. Now if you take your view over your mouse now to where I've set that stop loss to currently, now you find that it's in $210 profit. That is what is going to close us nicely at. Now we are doing this because the market is not being controlled by us, and it can happen that markets can come down here and eventually start going back up again. So we don't want to lose all our profit that we are seeing running now. We don't want to give all our profit back to the market. Hence we are using this approach of always using our stop loss to trail our profit. So whenever you drag it below your entry price, at that point in time you start trailing your profit. So if you should go up back now, it's going to close me here on $200 plus in profit. So this is another approach in which you can use to lock your profits, as well as protect your capital, because as you all know, there's nothing that is guaranteed in forex. So all we usually do, all sensible forex trader, all disciplined trader will always ensure that they protect their capital first. And one way to protect your capital is to ensure that you make use of break even, and as well as trailing your profit. So if you're a scalper, whether you're a day trader, whether you're a swing trader, it's always essential that you know how to break even your trade and equally trail your profit. By so doing, it helps to minimize the losses you are going to be having while trading the forex market, and that in itself will equally protect your capital and keep you long in the forex market. I hope this video is informative to you, and I want to thank you for watching. If you found value from this video, kindly hit the subscribe button, like, comment and share. I will see you in subsequent video. Bye for now.